Hello everyone! In the upcoming video series, we will continue analyzing drone companies, following the market capitalization ranking of pure-play drone companies. We will start with JOBY first. JOBY Aviation Score business is the research, development, manufacturing and operation of electric, vertical takeoff and landing eVTOL aircraft, which are low-altitude aircraft rather than just small drones. Its products are positioned as urban air mobility solutions, aiming to replace traditional helicopters and expand the short-distance air transportation market through the characteristics of electrification, low noise and vertical takeoff and landing. The eVTOL industry is in a critical transition phase from technological R&D to commercial implementation, and the industry structure and growth logic have gradually become clear. From the perspective of market size and industry development, the compound annual growth rate of the eVTOL market is expected to reach 54.9% from 2024 to 2030, and the growth rate of the urban air mobility segment is about 34.2%. In the longer term, Morgan Stanley predicts that the global market size will reach $1.5 trillion by 2040, covering diverse scenarios such as passenger transportation, cargo transportation, military use and emergency rescue. If the industry can really reach this scale, there is no doubt that multiple giant technology enterprises will emerge in this industry. JOBY is the most authentic eVTOL company and has certain advantages in technology, operation and commercial layout. In terms of technical parameters, there are several core indicators that are very important for eVTOL. One is speed and range. After all, it flies in the air, so the range must be guaranteed, and the speed under unobstructed conditions is also an important reference. The second is noise. Because helicopters are very noisy, they cannot be used as a common means of transportation in cities. At present, JOBY's 5-seat eVTOL performs excellently in these indicators. Its maximum speed is about 200 miles per hour. The battery electric range is about 150 miles, and the noise level tested independently by NASA is only 45 dBA. These characteristics enable it to have the basic conditions for operation in densely populated urban areas. Up to now, this aircraft model has completed long-range test flight verification and carried out high temperature and high-load environmental tests in Dubai and other places, and its technological maturity is at the forefront of the industry. On the technical side, JOBY focuses on breaking through FAA certification and has made significant progress so far. According to the Q1 shareholder letter released on May 7, 2025, the company has made record-breaking progress in aircraft certification for 2 consecutive quarters. The company plans to conduct test flights with JOBY pilots in 2025, and then FAA pilots will conduct direct evaluations to verify the aircraft's performance and safety. On the operation side, the company has also made gradual progress through the acquisition of a passenger transportation business company in 2024. It quickly obtained the right to use vertical take-off and landing airports in 12 cities, a mature booking platform and a user base of more than 50,000, directly locking in high-end market routes in New York, Southern Europe and other regions. Moreover, in terms of the overall ecosystem, the company has also built a manufacturing plus service plus partners system. It not only produces eVTOLs independently, but also integrates into the existing transportation network through cooperation with Delta Airlines, All Nippon Airways and others, while exploring diversified application scenarios such as national defense and logistics. The core of JOBY's business model is to reduce expansion costs through technological barriers plus ecological cooperation while ensuring long-term profitability. The company's revenue sources can be divided into 3 categories. The first is eVTOL sales. At present, Saudi Arabia is expected to place an order for 200 aircraft, with sales of about $1 billion. It also cooperates with All Nippon Airways, 100 aircraft in Japan, to sell aircraft to global operators, which is the main short-term revenue growth point. The second is air taxi operation, relying on Blade's existing network. It carries out passenger transportation services in the United States and Europe, charging per trip. Expected TOB $100,300 per tip, and the gross profit margin is expected to reach more than 40%. Lower than the peasant. The third is government and special services. It provides testing services for the U.S. Air Force, with revenue of $1 million in 2003 and cooperates with L3 Harris to develop hybrid VTOLs for national defense, expanding into non-civilian markets. In terms of specific performance and financial performance, as an unprofitable technology enterprise, JOBY's financial performance shows the typical characteristics of high investment, high consumption and low revenue. In the second quarter of 2025, the company's operating revenue was still low, and no large-scale commercial revenue was realized. In terms of net profit, the net profit attributable to shareholders in the second quarter of 2025 was $325 million, with a year-on-year loss expansion of 163.34%, mainly due to high R&D, accounting for 60% of expenses, and certification costs. With no revenue and continuous expansion of losses, cash flow is very important. At the end of the first quarter of 2025, JOBY had $813 million in cash and short-term investments, excluding the additional $500 million investment promised by Toyota. Toyota's $500 million investment will be carried out in 2 phases. The first phase of $250 million investment has been completed and is expected to be reflected in the company second quarter cash balance. Compared with its competitor Archer, JOBY has a lower degree of share dilution, mainly relying on non-dilutive capital injections from strategic investors such as Toyota, which is more friendly to long-term shareholders. In addition, it has achieved small-scale revenue through Department of Defense contracts. Although this is not enough to change the profit situation, it verifies the feasibility of business diversification. In addition, JOBY has optimized efficiency through to major measures in cost control. On the manufacturing side, with the help of Toyota's lean production experience, JOBY has completed the expansion of its manufacturing base in Marina, California, with a total area of 435,000 square feet, and its production capacity is expected to double to 24 aircraft per year. In addition, the newly renovated factory in Dayton, Ohio is about to be put into use for the manufacturing and testing of key components, with an expected annual production capacity of up to 500 aircraft. On the operation side, JOBY acquired Blade to obtain existing infrastructure, reducing capital expenditure on self-built vertical takeoff and landing airports. The construction cost of a single airport is about $5–10 million and realizing asset light expansion. The advantage of this model is that it not only retains the high barrier of core technology eVTOL R&D and manufacturing, but also reduces the risk of heavy asset investment through cooperation, forming a difference from the self-research, self-manufacturing and self-operation heavy model of traditional aviation enterprises. JOBY's current market capitalization performance is volatile. At present, its total market capitalization is about $12.369 billion, and the TTM price to earnings ratio is 13.56. Compared with Archer, JOBY not only has higher market capitalization, but also occur multiple corresponding to the projected 2027 revenue. The premium mainly comes from its leading certification, about 2 years ahead, higher manufacturing certainty, supported by Toyota, and more stable cash flow, high proportion on fond-dilutive financing, compared with traditional aviation enterprises. Its market capitalization has exceeded that of American Airlines $8.2 billion, but the projected 2027 revenue is only $130 million. American Airlines 2023 revenue was $39.3 billion. If calculated based on the global eVTOL market of $30 billion in 2030 and JOBY's 10 market share, the corresponding annual revenue will be $3 billion. Given a 20x price to sales ratio, the reasonable market capitalization is about $60 billion, which still has a lot of room for growth compared with the current level. However, this calculation is based on the following premises. The FAA certification is completed as scheduled, the manufacturing cost decreases as scheduled, and the market acceptance meets expectations. Any failure to meet expectations in any link will reduce the valuation. Therefore, if JOBY develops well, it still has great growth potential, but correspondingly, there are some potential uncertainties and risks. For example, problems such as certification delays, safety accidents, and increased competition may lead to the burst of the valuation bubble. Overall, as a leading enterprise in the eVTOL industry, JOBY has 3 core advantages: leading technology, perfect ecosystem, and stable capital. In the long run, it is expected to benefit from the large-scale implementation of urban air mobility. However, problems such as its high short-term valuation, long profit cycle, it is expected to turn profitable only after 2029, and great industry uncertainty cannot be ignored. In terms of investment strategy, in the short term, we should pay attention to indicators such as the progress of FAA certification testing, the production capacity ramp-up of the new factory, and the route utilization rate after blade integration. If the indicators are good, we can build a small-scale position. In the medium and long term, we can further verify the commercial operation data such as per-seat revenue and cost reduction curve, and then gradually increase the allocation ratio.